Hello financial fans, all is well with me. Hope the same is true with you. We will talk a little bit about the market. Some people have been asking, how do you get into the market? I do have some videos up, beginner's guide to get in. The basic idea, pay off your credit cards. If you have a credit card, you probably won't make as much percentage-wise in the market as you will by paying off your credit card debt, getting that out of the way. And for those of you who think you are ready financially to get in, study the market for a year. Go to Yahoo Finance. Yahoo Financial page is a good place to start. There are many, many other pages that are equally as informative as Yahoo. But I know about Yahoo, and you can study not only financial stock situations of each company right at this moment, what their stock is selling for, but you also can find some information in the way of news. They have the news, like maybe McDonald's has come out with a new hamburger, or maybe there's something new in the electric car market, etc. Study the market for a year. You will eventually come across something and say, hey, that's something I know a little bit about. I'm going to watch that particular stock. Get to where you can study about 20 to 25 stocks at least with some regularity and know what they are doing, and learn to read the information that is available for each stock. And for me it means PE ratios, price earnings ratios. I try to get them under 10 if possible. Try to get a volume of 1 million shares or more per day. I look for a dividend if possible. We'll have an interesting dividend play here coming up in my stocks that I will spotlight for Monday consideration. 4 stocks here we'll look at, but dividend, that's money that comes into you. That's over and above any capital gain. If your stock happens to go up and you sell it at a profit, that's capital gain. That's one kind of tax in the United States. And the other kind of tax would be for dividend, which is regular income, and you might pay more tax percentage-wise on dividends than you would on capital gains, depending on the situation. And there's also such a thing as capital losses. If you're anything like me, you will lose money on some stock, and you deduct that at the end of the year from your capital gains. But study for a year and then decide which broker is best for you by reading the broker's small print. And you'll have to send money, like a check, to the broker, or I would guess you probably can open an account with a credit card, but you'd have to wait until about a month goes by before the funds are definitely deposited. My recommendation, study the market for a year, and if you've got a checking account, send a check to a particular broker that you think is going to be the best, and start picking some stocks and buying them. And don't be elated or depressed. Don't panic if the stock goes down. I've had days when I've lost in value, thousands of dollars in value, and then there's days when there's thousands of dollars in gains. You only make money or lose money if you sell the stock. What I also would recommend, watch some old videos at YouTube of Wall Street Week with Louis Rukeyser and get the feel for trading stocks. You don't have to be like Jim Cramer bouncing off the walls. Oh wow, this one's going to the moon. This is the greatest thing ever. If you have a calm mental approach, you'll be better off in stocks. But anyway, let's get started. We'll look at 4 stocks here. I think these look interesting enough that I will at least consider buying one or more of them on Monday morning. And we begin with Coca-Cola. You've heard of Coca-Cola. KO is the symbol, and the price, closing price, $52.67. That was Friday's close here. This is what, 11:20? This is Friday, I guess, so 11:20. $52.67 per share, the close. And in the first column we see the 52-week range, $36 up to $60, so it's kind of in the middle there of the two. Has plenty of headroom. It can go up easily enough. The volume, 14 million shares every day, 15 million will make it. And next column, middle column, PE ratio with 27.29, higher than what I like, but this is Coca-Cola. They are going to be selling Coca-Cola even during the quarantine. I would not be too worried about that PE ratio. I think Coke has a lot of upward potential. The forward dividend we see 3%. That's good. It's very good for a stock which probably will be growing. And the one-year target estimate, according to Yahoo, $56.40, which is a nice gain from the current position there, $52.67. And next stock, Merck and Company. I've owned Merck a lot of different times. MRK is the symbol. They're in the pharmaceutical health care type field sector. And the 52-week range you see down in the middle of the first column on the left, $65 up to $92, make it $93. So it's got plenty of headroom. It could go up quite easily. Average volume, over 8 million shares trade every day. The PE ratio is $17.77 or 17.77, and that is not bad for a pharmaceutical. Earnings per share $4.53, which explains their dividend down there of 3.23% right now, $2.60 they pay out per share every year. And the one-year estimated target, $95.58. So that is a nice move up from its current $80.45. If that happens, we shall see. And we move on to the next stock. And this next stock is one I kind of have great hopes for. ARKG is a symbol, and it's ARK, Genomic Revolution ETF Exchange Traded Fund. I had two different ARK stocks. I had ARKK and ARKW. This is ARKG. And we'll go right away to the middle of the second column and see the daily year-to-date daily total return, 121.20%. The ARK people seem to have some idea of what they're doing, so I'm just going to trust them. If they've done this well on three different stocks or exchange-traded funds I know about, worth a look. Certainly average volume, a little over 1 million shares. So ARKG is one to look at. And the last stock we look at today is one I happen to own, Exxon Mobil Corporation. I've had it for a long time. It pays a dividend. You'll see in the middle of the second column, forward dividend and yield 9.3%, $3.48 a year is what you get for holding on to that if you buy it at $36.94. That's the price as of closing today, Friday 11/20. 52-week range, $30 to $71, so it was twice as high as it is right now, almost. And the forward-looking target for 1 year from today, the bottom of the middle column, $43.30, which would be a nice gain if it happens to do that. And as I say, I do own that stock, and I'm holding on to it. The dividend is nice to receive, so I thank you very much for watching.